Potatoes. They're everywhere on American plates, from crispy French fries at your favorite diner to mashed potatoes at holiday dinners. But what if something as simple as a potato becomes a symbol of a brewing trade war? That's exactly what's happening right now between Canada and the United States. In 2025, U.S. tariffs on Canadian goods have triggered a sharp decline in potato exports. The result? Rising prices, shifting trade routes, and growing uncertainty for farmers and consumers on both sides of the border. Let's dive deep into what this means for your plate, your wallet, and the future of North American trade. Canadian potato exports to the U.S. have dropped by nearly 40% in the second quarter of 2025. That's not a small dip. That's a massive disruption in a trade relationship that has been stable for decades. So what caused this sudden change? In March, the U.S. government imposed a 25% tariff on a range of Canadian agricultural products, including potatoes, ostensibly to support American farmers and correct perceived trade imbalances. On August 1st, that tariff was officially raised to 35% on Canadian goods not covered under USMCA. While some exports compliant with US-Mexico-Canada Agreement rules may still escape the hike, many Canadian potato shipments likely face the full rate unless they qualify for exemption. Why does this matter so much? Because before this escalation, more than 90% of Canadian potato exports, whether fresh, frozen, or seed, went directly to the U.S. That dependency now comes with a much steeper price tag. Now, what does this mean for American consumers? Tariffs don't just stay at the border. They flow straight into the prices you pay at grocery stores and restaurants. Industry experts estimate retail prices for potatoes and frozen products could rise by 8 to 12 cents per pound. That might sound small, but multiply that by the thousands of pounds consumed across the country every day, and the impact adds up fast. For a 22-kilogram bag of potatoes, costs could climb from about $22 to nearly $30.
And it's not just raw potatoes. Fast food chains, diners, and big-name restaurants are adjusting menus, cutting back on portion sizes, and in some cases, even removing potato-based dishes altogether. Yes, even your beloved French fries could be at risk of becoming a luxury side. Meanwhile, on the Canadian side, the ripple effect is even more severe. Canadian processors like McCain, one of the biggest potato companies in the world, have reportedly reduced contract volumes with growers. Farmers in provinces like Prince Edward Island, New Brunswick, and Alberta, the heartlands of Canadian potato farming, are being forced to rethink their entire business model. Many are cutting back on planting for next season, with some estimates suggesting reductions in the range of 15 to 25%. While these numbers vary, one thing is clear. Farmers are scaling back, and that means less production, less income, and more uncertainty in rural communities that depend on potato farming for survival. So, what is Canada doing to fight back? The answer is diversification. Canadian producers are aggressively seeking new markets in Asia, with countries like Japan, South Korea, and Indonesia on their radar. Ottawa is backing these efforts with new trade initiatives and financial incentives. There are even reports of a multi-billion-dollar push to strengthen agricultural exports to Asia. But let's be clear, shipping fresh or frozen potatoes thousands of miles across the Pacific is no easy task. It involves complex logistics, cold storage, and massive transportation costs. For small and medium-sized growers who don't have the resources of global giants like McCain, entering these new markets is a steep uphill climb. And that brings us to the bigger picture. Potatoes may seem like a simple commodity, but they're now a frontline casualty in a much larger economic conflict.
The North American trade framework, which for decades has been based on stability and free-flowing goods, is showing cracks. What's happening with potatoes today could happen tomorrow with dairy, meat, or grains. In fact, early signs suggest those sectors are already feeling pressure as tariff threats expand. Add to that the higher input costs for American farmers, from fertilizer to fuel, and you have a scenario where both sides are losing. Canadian farmers face shrinking markets, and American consumers are footing the bill at the checkout counter. This isn't just about economics, it's about people. In rural Canada, family farms that have operated for generations are questioning their future. In U.S. households, families already struggling with inflation are now paying more for basic staples like potatoes. And in the middle of it all are the businesses, restaurants, processors, truckers, scrambling to adapt to a trade war they didn't start. So what happens next? Will the U.S. stick with its tariff strategy, or will mounting pressure from consumers and industries push for a rollback? Will Canada successfully pivot to Asia, or will the cost of logistics make those new markets less viable than they seem on paper? These questions don't have easy answers, but one thing is certain. The humble potato has just become a powerful symbol of how interconnected and fragile our food systems really are. What do you think? Are tariffs the right tool to protect domestic industries, or are they hurting more than they help? Drop your thoughts in the comments and let's start a conversation. If you found this analysis useful, hit that like button, subscribe, and stay tuned for more deep dives into the global economy, because the next big trade story might already be on your plate.